Good day everyone, welcome back to this channel. In today's video, we are going to go over an opening range breakout, but we are not going to do it the traditional way where we are going to wait for a breakout and continuation. We want the low or the high of the first 15 minutes of the New York Open to be taken, and then we are looking for a reversal where we are going to enter from an inverse fair value gap, and I'm going to show you where you can place your stop losses and where you can take your profits. So it's not your ordinary opening range breakout strategy. I have made a video of this. Link is down in the description. So with no further ado, let's get to the video and let me show you how we can use the opening range breakout, well, opening reversal breakout, and let's see how we can get our trades from there. So let's jump straight to the video. Awesome, everyone. So what we look for, we are going to look for the first candle 15-minute of the New York Open. So New York time, Eastern Standard Time is 9:30. So this is going to be the 9:30 candle, 9:30 a.m. New York time candle right over here. So what we want to look for, we want to wait for the first 15 minutes to end before we start looking at any trade. So what we want, we are going to draw out the high of the first 15 minutes, and we are going to draw out the low of the first 15 minutes, so high and low. After this, we are going to jump to the 1 minute after the 15-minute close, and we want to wait for something to happen like this, where we break out, we create a fair value gap, we want it to be inversed, and then we are going to enter and we are going to target a fixed 1 or 2 risk to reward trade. So what we're not going to do, that's why I said it's like an opening range breakout or opening reversal breakout, because we're not going to follow the normal rules where we get a breakout, retest, continuation to the upside or downside. We want a reversal. So the first 15 minutes, 9 a.m. New York Open time. So let's go straight to the charts and let's look at some examples. All right, so let's have a look at the first example. As you can see, 9:30 right over here. We are on the 15 minute. So we want to wait for this candle to close at 9:45. So what we want to do, we want to mark out the high and the low of the first 15-minute candle. And then we are going to jump to the 1 minute. So here you can see 9:30, so 15 minutes has passed. So let's play price forward and see what happens. We got a break right over here. We can see this was our fair value gap. So if we get a break above this fair value gap, we are going to enter a trade. There we go. We have our break right over there. So we are going to enter our trade right over here. And where do we put our stop loss? We're going to put our stop loss at this low right over here. You can put it either at the wick or at the body. And we are going to target a fixed 1 or 2 risk to reward trade. And let's see how this one plays out. As you can see, immediately stop loss hit, but look what happened. We broke out again. We took this low. So let's delete this one. So that's a losing trade. Here you can see right over here, we have a fair value gap resting right over there. There was no fair value gaps created right over here. This was the last one. It becomes an inverse fair value gap. You can enter your trade right over there. Either your stop losses here or at the bottom of this wick. And we are going to target a fixed 1 or 2 risk to reward trade. And let's see how this one plays out. Nice in profit. And there we go. as you can see, we got our profit right over there. All right, so let's look at another example. All right, so let's have a look at this example right over here. As you can see, 9:30 open. So we mark out the highs, we mark out the lows, and then we jump to the 1 minute. So here's your first 15 minutes. So let's see what happens. Immediately we broke through. Was there a fair value gap? Where was the last fair value gap? It was this one right over here. So if we break below this one, we are going to take a sell trade. Pushing up again, we broke these highs. There's a new fair value gap created right over here. So let's see if we broke below that one. We need a candle closure. We got a close right over there. So now we're going to enter our trade, going to put our stops either here or there, and we're going to target a fixed 1 to 2 risk reward trade, and let's see how this one plays out. And as you can see, immediately smashed to the downside. So that's another winning example. Let's look at another example. All right, so let's look at the last example. We got our 15-minute high and low right over here. Let's jump to the 1 minute. Here's our 1 minute. So now let's see if we get a break to the up or downside. There we go. We got our break. Where was the last fair value gap? It was this one right over here. So if we get a close below it, we can enter our trade. Is there a fair value gap? There's a small fair value gap created right over here. As you can see, let's continue. We need a close below this one to confirm it. There's another fair value gap created right over here. There we go. We got a close below. Stops right over there. Target a 1 to 2. And let's see what happens. And as you can see, immediately to take profit. So that I just wanted to show you the 3 examples we used actually in this video. It was 3 days in a row. So you can see here it was on the 21st of August, right over here, was that losing and winning trade. So this is a 1% gain. Here was the next day, right over there, on the 22nd of August, winning trade. So it's 2% gain. And then this one was this one right over here, the 25th of August, and we have a winning trade. So in total, it was 5% gains. Right, everyone. So I hope you enjoyed this video. Please leave a like and subscribe down below in the description. Go test the strategy for yourself, back test it first, and let me know in the comments, what do you think? Do you think the opening reversal breakout works, or are you someone that's going to stick at the opening range breakout? Let me know down in the comments. Please leave a like and subscribe, and then I'll see you in the next one. Cheers.